Welcome back to the Malaysia Money Matters show. It's the 25th of June, 2025. Today, we're going to cut through some of the noise in the financial headlines. We'll focus on what really matters for Malaysia's economy and for your investments. We'll start with some key company news, then look at the broader economic picture here, and finally zoom out to the global stuff impacting us all. Okay, so let's unpack some of the significant moves happening within Malaysian companies. First up, AE Multi. Its largest shareholder, Erdasan, well, they've just offloaded a 5.96% stake. Now, Erdasan is still the top shareholder, but this comes just as their former executive director is facing embezzlement charges. What's the read here? Is this just portfolio management or something more?
Well, that's the key question, isn't it? Officially, maybe it's rebalancing, but the timing with those charges, it definitely raises eyebrows. It adds a layer of scrutiny for investors, makes you think about corporate governance, even if they aren't directly linked. Bit of shadow, perhaps.
Okay. Moving from that to maybe something clearer, Bonia is making a strategic property play. They're fully acquiring the subsidiary, Casa Bologna, for RM 2.1 million. This gives them full ownership of some prime land in Bukit Bintang. This feels like more than just tidying up assets, right? It's locking down prime real estate for the future.
Exactly. It signals real confidence in that high-end retail space long-term. And speaking of building, Crest Builders secured a pretty big contract, RM 233.3 million. This is for building service departments in Bukit Jalil, and it significantly adds to their already substantial order book, RM 1.7 billion outstanding. That provides a clear earnings runway for them.
Right, visibility is key. Now, a huge one in the property sector, IGB Real Estate Investment Trust, they plan to buy Mid-Valley South Key Mall down in Johor Bahru, the price tag, a staggering RM 2.65 billion. This is their first major move into Johor, and it massively boosts their total property portfolio.
Oh,
What's the strategic thinking behind such a large acquisition?
it's a game changer for them. It's not just buying another mall. It's IGB REIT planting a flag firmly in Johor, a major economic hub, shows huge confidence in Johor's growth, especially with, cross-border traffic potentially picking up. Plus, it diversifies their income streams away from just the Klang Valley. Very bullish on regional retail.
Okay, another potentially massive deal. MMC Ports. There are reports they're filing for an IPO. And this could raise, what, US $2 billion? That would make it Malaysia's largest IPO since 2012.
Yeah, that's not just a big number. It'd be a landmark event for the market. An IPO that size could really boost liquidity, maybe attract significant international investment into Malaysia's infrastructure. It's a strong vote of confidence, really, in both the Malaysian market and the port sector itself.
Okay, moving on to MyNews Holdings. They're expected to post stronger earnings for their third quarter. Analysts point to better margins from cost management and better operating leverage. Can you quickly unpack operating leverage for us?
Sure. Think of it like this. As their sales increase, their fixed costs don't increase at the same rate. So those costs get spread over more sales, making each extra ringgit of sales more profitable. It basically means their efficiency is improving. Suggests their cost-cutting and operational improvements are really starting to pay off.
Got it. More efficient operations leading to better profits. All right, so those are some key company stories. How does this all tie into the wider Malaysian economy and policy? Let's look at the macro picture now.
Well, one positive development is the Federation of Malaysian Manufacturing, the FMM. They've welcomed the new electricity tariff restructuring. They noted about a 19% rate reduction for some members. And, importantly, significantly increased off-peak hours. That should really help businesses manage costs and energy demand better.
That's good news for competitiveness. And FMM also highlighted the new trade deal, right? The one with the European Free Trade Association. Expected to boost industrial exports, attract high-tech investment, especially helpful for SMEs.
Exactly. It's about opening new markets and attracting quality investment. And on the domestic front, inflation seems quite tame. May's consumer prices rose just 1.2%. That's the slowest pace in over 3 years, mainly because food price increases moderated. So the outlook for inflation for the rest of 2025 looks pretty benign.
Benign inflation. That naturally leads to the interest rate question. Some economists are suggesting Bank Negara Malaysia might cut rates, maybe even in July, citing weak trade and this low inflation. But others expect rates to stay put. Are we really in the clear, though? Could global factors stir things up again?
That's the crucial point. Domestic inflation looks good, yes, but global uncertainties, commodity prices, supply chains, geopolitics, They're the wild card. So Bank Negara Malaysia, they'll be watching everything very closely. A rate cut is possible, sure, but a cautious wait-and-see approach might win out, just to be sure inflation stays low.
Right, caution seems prudent. Okay, we've covered the local scene. Let's shift focus globally. What international developments are moving the markets right now?
Well, the big news yesterday was the rally in Asian emerging markets, both stocks and currencies. This was fueled by optimism, basically, after reports that Israel and Iran agreed to a U.S.-brokered ceasefire proposal. It just shows how quickly geopolitical news can flip market sentiment from risk-off back to risk-on. Money flows back in.
And that de-escalation hit oil prices immediately, didn't it? They tumbled to more than a one-week low. For Malaysia, being a net oil exporter, that's a bit mixed, I suppose. Lower government revenue, maybe, but potential relief on costs for industries and consumers.
Precisely. It's a double-edged sword, but lower energy costs generally help contain inflation. Also, related to that, air travel disruptions in the Middle East started easing as airspace reopened, though tanker rates did spike earlier due to the tensions.
Shifting to the U.S., the Federal Reserve made an interesting announcement. They said they'll stop policing reputational risk at banks. Supervisors should focus only on specific financial risks now. Seems like a subtle but maybe significant shift, aligning regulators.
Yes, it clarifies the Fed's focus purely onto measurable financial risks, rather than broader, harder-to-define reputational issues. It simplifies things for banks, potentially. But speaking of the Fed, the Atlanta Fed president gave a more cautious signal on rate cuts. He mentioned companies planning price hikes due to higher import tariffs and the job market still being stable, basically suggesting inflation pressures might still be building up in the U.S.
So if the U.S. Fed holds off on cuts because of lingering inflation fears, what does that mean for us here?
Well, it could mean the U.S. dollar stays relatively strong, and potentially less capital flowing into emerging markets, including Malaysia. It's definitely something we need to keep a close eye on. U.S. monetary policy has global ripples impacting trade, investment, everything really.
Absolutely. A lot to track there. Okay, that wraps up our deep dive for today. Looking at everything we've discussed, from local company moves to global shifts, what's one key takeaway for our listeners about navigating these times?
I think it highlights the need for diversification and staying informed. Local resilience is there, but global factors can change the picture fast. And for more valuable insights like these, make sure you subscribe to the Malaysia Money Matters podcast.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.